Crypto markets crash. What now? In this video, we're going to be talking about some of the reasons why we've seen this recent dip in the crypto markets. We're going to be talking about what you can do to protect yourself in a dip like this. We're going to be talking about some of the emotions that you might be feeling when you see your portfolio down 30, 40%. And then finally, we're going to be talking about the long-term effect that this might have on cryptocurrency. Good morning, everybody. First, let's talk about the reasons why we've seen this dip in the crypto markets. And the reason is basically fear in the marketplace. And one of the main catalysts that has caused this fear is, of course, a Chinese real estate company called Evergrande that is on the brink of bankruptcy. Now, this can be related back to what we saw in 2008 with Lehman Brothers going bankrupt. A huge company that's not able to pay their debts has a huge knock-on effect for the world economy, and this is no exception. So Evergrande, a huge Chinese real estate company, if they should actually go bankrupt, if they should default on all of their debt, we can see that this will have a negative knock-on effect on the world economy. Now, this hasn't happened yet. Granted, they have defaulted on some of their debts, but we don't know if we are going to see the Chinese government bail them out or give them some type of package to keep them afloat, in which case there is no event that is actually going to take place. But if they don't, it could possibly be a negative, a massive negative thing for the world economy. If we have a look at the world, at the fear and greed index, of course, we can see the extreme fear in the marketplace at 21%. This once again confirms the fear that we are seeing in the market. Market sentiment very, very fearful. Two other reasons why we've seen this dip in the cryptocurrency market. One being that the Americans have put out reasonably stiff legislation against cryptocurrency, and that shocking the market to a certain extent. The possibility that the rest of the world is going to follow the American leadership in the cryptocurrency regulation. The regulation, not ideal for cryptocurrency. Not devastating, but it is harsh regulation. And if we are to see this roll out throughout the rest of the world, cryptocurrency certainly will survive. It's not something to be devastated or worried about, but it's not favorable to cryptocurrency, if I can put it this way. And then the third reason that we're going to discuss on this video, and this is rather complex, but the American government and the American economists have realized that they can no longer continue to inflate the currency. So they are looking at ways of strengthening the American dollar and making sure that the American dollar remains the reserve currency of the world. So they are going to be looking at tapering. They are going to be looking at ways of strengthening the dollar. And as we know, inflation is good for cryptocurrency, good for the alternative financial market. But once sound thinking comes back into the traditional financial markets, we know that would slow down the adoption of cryptocurrency and the alternative financial system. But it is good news if our economies and our currencies in the traditional sector are looked after and are preserved. So either way you look at it, it is a positive, but it is one of the reasons that we are seeing a bit of a dip in the crypto markets. Now, that being said, let's have a look at what is actually happening in the markets. We can see on Altcoin Trader, we've got Bitcoin trading at about 650,000 Rand per coin. Last night, we saw it drop as low as 619. So certainly a dip, a bit of a bounce back. If we look at CoinMarketCap and we have a look at the general markets, we can see Bitcoin trading at about 42,000 US dollars. And all of the cryptocurrencies, of course, following Bitcoin, a substantial dip in most of the currencies. If we look, we can see over the course of last night, we had Bitcoin dropping below the support barrier of 40,000 US dollars. We saw it trading right down to 39,787 US dollars. But a bit of a bounce since then. And right now, uncertainty in the market. Nobody can say for sure whether we are going up from here or down from here. Now, if you're looking at a lot of videos, watching a lot of technical analysis, remember that the best answer you can get from anybody is a humble answer of honesty, where they say they don't know which way the market's going to turn. Just like we are not able to predict what next week's lottery numbers are going to be, we're not able to determine with any amount of certainty what is going to happen with the markets. However, With cryptocurrencies, with the alternative financial system, and with Bitcoin, the fundamentals are extremely strong. And based on the fact that the fundamentals are strong, we know the long-term trajectory of the cryptocurrency market. Or at least it is a best guess that it is going to have a positive outcome. But we'll get back to that a little bit more. Now, let's talk about the emotions that you might feel when you see a drop in your portfolio. A lot of people that I speak to, they say to me, I should have sold when it was high. I should have got out, blaming themselves and being extremely hard on themselves because of the fact that they didn't get out when the market's high. Guys, I'd like to take a second just to suggest that timing the market, even for expert traders, is extremely difficult. Don't beat yourself up. I have resigned myself to the fact that I am not able to time the market. So timing the market, getting out when it's high, getting back in when it's low, is in theory very good, but in practical very difficult to execute. So if you find yourself in a situation where you're beating yourself up because you didn't get out when the price was high, just relax and have some understanding, have some wisdom that it is not always easy or possible to do that. In fact, it seldom is. And stay in the market, just relax, don't beat yourself up. The market is going to ebb and flow. We're going to see peaks and troughs. And to a certain extent, when you're in the market, you are subject to the market volatility. Now let's talk about what to do and how to protect yourself in situations like this. Whenever we see extreme market conditions, do not panic buy, do not panic sell. So let's just unpack this a little bit more. If ever you find yourself in a situation where you have to rush to your computer to make a trade, and this is either a buy or a sell, because you need to do it as a matter of urgency and you're panicking, most of the time, those actions end in disaster. So when you panic buying or panic selling because it's urgent, you've got to do it right now because the price is either going up or it's going down and you don't want to miss out. As I said, and I'm repeating myself, you normally get hurt. When the markets go down, the only time that you lock in a loss is when you sell. Bear that in mind and just think about that critically for a second. If prices plummeted and you sell, you've locked in that loss by going into fiat. If the price continues to go up and you want to get back into the market, you have to buy back in at a higher price and you will end up with less cryptocurrency. You'll end up with less Bitcoin. So think about that. If you stay in the market and the price turns around and goes up, you obviously will be in a better position than if you sold. Now, if you're saying no, but what if I sell and it drops further and I buy back in, I will have more Bitcoin? I'd like to say that's certainly a possibility and that is something to think about. However, remember you missed the top. Now you're thinking that you have the ability to time and understand that the market's going down further. So you've missed it once, now you want to try and have another stab at it. If you think that Bitcoin and cryptocurrencies are going to go to all-time highs again, it is a risk-averse play or a less risky play to just stay in the market, not try and sell and buy in lower, because as markets go up and they reach their all-time high again, you will be in profit in your portfolio. Guys, share your thoughts and comments below on that sort of strategy and that type of thinking, because that's what I found has been very effective in the past for me. And finally, in this video, we are going to be talking about the long-term effects of cryptocurrency. But before we do that, let's just have a quick look at CryptoPunks, because this is something that I'm passionate about, something that I'm looking at. I love NFTs and I've been watching NFTs for the last couple of months. And it's interesting to note that while we've seen huge turmoil in the market, the price of blue chip NFTs has not really taken a tumble. CryptoPunks still have a floor price of 100 Ethereum. Okay, we've got one at 97, but after that, everything is 100 Ethereum plus. I do understand that, of course, the price of Ethereum has dropped, thereby the value of the NFT has dropped. But it is certainly worth noting that we haven't seen a plummet of the NFT market. Certainly some of the low cap NFTs have taken a dip, but very interesting and a very exciting space to be keeping an eye on. Okay, let's get back to finally what we're going to see, the outcome of cryptocurrencies. Long term, And I'm more of a fundamental person than I am a technical analysis person. Long term, the fundamentals of cryptocurrencies looking extremely bullish. We've seen a lot of building in this place. We've seen a lot of very promising projects that are going to be launching in the near future. We're seeing a lot of utility in this space, which we've never seen before. In other words, we've seen a lot of financial products. We've seen a lot of things that can be done in this space, which ties up a lot of cryptocurrency. In other words, if you are in NFTs, if you are in earnings, if you are taking loans, your currency is not liquid. There's a lot of steps that you need to take before you can actually get to the point of selling, which means a lot of people are using cryptocurrencies for real world applications, and they don't have them on an exchange ready to trade in a heartbeat. And this will steady the price, and this will even out the price. And this will even cause a lot of people to not be concerned about the price, because they are more concerned about the use case and what they are doing with their cryptocurrencies. So long-term fundamentals looking extremely good for cryptocurrencies. Now guys, remember, this is just simply my opinion, but long-term, I don't think you can go wrong with crypto. I believe that crypto is here to stay, and 10 years, 20 years down the line, we are going to be in a much better position than we are. So based on that, and with the fact that this, of course, is not financial advice, it is my opinion, backed up by what I've expressed in this video, I think that it's a situation where we all need to relax, knowing that cryptocurrencies are very likely to reach all-time highs again. We can look forward to staying in crypto and being in this amazing alternative financial system. Guys, if you like the content, if you like what I'm saying in these videos, I'd ask you to smash the like button. And if you haven't subscribed, please subscribe to my videos. I'd very much appreciate it. It is a way to support the channel and help me to get the word about cryptocurrency, something that I'm extremely passionate about, out to more people. That's it from me. I'm out.